Hello guys, welcome to the Trading Parrot. After the fears from the tariffs becoming effective as soon as today was all that was needed to create a breakdown on the weekly timeframes for general markets, including the S&P, the Russell 2000 and the NASDAQ, I am seeing at the moment a small move on the 1 hour timeframe. High risk, high reward that I want to discuss with you guys. I'm also going to show you a potential target in case that setup fails. What could be the next level down in the ladder where I'm interested in buying. For that, I'm gonna pull out a trick from my sleeve and I'm gonna share it for the first time with you guys in this video. This is something I haven't done ever before publicly. And no, don't get excited. It's not taking off my shirt and start to act like Crypto. I promise you it's something technical. Only charts in this channel. Guys, if you like this type of content, make sure that you are subscribed to the channel. Hit the notification bell to get notified every time I put out one of these videos. On the weekend, we crossed the 1,000 likes. During the week, with the disappointment, with all the people getting liquidated, tons of people having a tough time. They're coming to my videos and writing down comments with anger after experiencing heavy losses, still not able to understand what I'm trying to say in the videos, which is by itself the first alpha that I'm gonna use today. Look at this. This is the interest over time of Bitcoin, and what I'm seeing there is that the last reading on Google Trends is taking out an imaginary line there of resistance. This one is pointing now to 42. Of course, it's an in progress candle. It could retrace back down, but I feel that that is the combination of the price coming down, then getting the tweet from Trump, the expectations of a potential rally into the news, then the fears again, the retracement, the pullback, the pump and dump, and all of that tends to be something that attracts the flies straight to the shed. Being very quiet is the times when we get focused on what's going on. Having additional retail doesn't mean we need to switch off the laptop and not take a trade, but we need to treat it with a different approach. After all, we are market makers wannabe, and in that journey into stepping out from the dumb money into the smart money, we understand that we need to take advantage of this. Do not trade like thinking that you're trading with $100 with $1,000. Think that you're trading with billions of dollars and that you've been waiting for this moment to dump on these people. If you don't have that mentality, I'm afraid that you have the opposite mentality, which is to follow the herd, get trapped straight to the slaughterhouse. So you tell me which one you prefer. Personally, when I see this, I tend to be a lot more cautious. It doesn't mean sell, it doesn't mean buy, it means a different attitude. There is a bunch of news that I want to mention. For example, the IMF deal to ban public sector Bitcoin accumulation in El Salvador, which is not confirmed yet. It's a discussion going on, but that could bring some additional fears since El Salvador, after all, has become the role model that everybody is expecting other countries to follow. And by having one of the first ones to kind of step back in that direction, of course, it's gonna leave a lot of people talking about it. And of course, this one to me is bullish. Bitcoin no longer safe haven as 82k BTC price dives, leaves gold on top. Every time we get a headline like this, we interpret it the opposite. All these headlines of gold being the ultimate safe haven when Bitcoin is crashing is always coming up in the news as a reversal signal 99% of the time, just to be clear. And another one that could be perceived as bearish is the fact that Bybit so far hasn't managed really to get all their cash back, even with the help of Tether and different institutions trying to contain that. There are still some shady exchanges, small ones, that are taking advantage of the high volume that means to be washing this Ethereum coming from millions of wallets. Well, I don't know if it's millions, but too many wallets, and helping them distributing it and taking a cut and taking advantage of that. Very disappointing. I'm very curious how we're gonna end this week when it comes to the crypto summit. My current stand towards that is a sell the news. That has been the past performance. We know that. You let me know in the comments if you are extremely excited and you think that that's gonna bring a new all-time high. Remember that there's not just a single way of seeing these things. If we start seeing that too many people are negative towards this, it could be the opposite. It's very slippery to spot the actual outcome and remain focused, because things can change at the moment the general markets, the tariffs are getting the spotlight, and crypto is really not caring that much about this event. The best thing that could happen today is another delay of the tariffs, which will weaken the idea that they are ever going to take place. And the weaker that idea, the less effect. It's like this tale of little Peter, if I'm translating that correctly into English, where he constantly says that the wolf is coming, is gonna eat the sheep, and everybody reacts to that, and eventually little Peter is taken by a liar and no one shows up the day that actually the wolf comes in. Anyways, no more bedtime stories. Let's continue with this and let's go to what actually matters, which is TA. I was just noticing this morning that this pattern in here is a combination, not just as a double bottom, but if we break below now this neckline, we are breaking from a larger pattern. Focus on this and ignore the fact that it's a double bottom, and you can call it a cap and handle. Thanks to this move in here with that triangle and placing this towards the bottom of the liquidity, we can get into 110.5 on the global M2 if we were to break out from here. And if you think that is crazy that I'm doing TA on the global M2, you haven't seen really my channel, because literally I do TA on everything. I have a video where I did TA and various divergences, RSI, MACDs and patterns on my views in YouTube in a chart on TradingView against Bitcoin price action. If you find that video, I don't have time to search for it, but if you can find my video, please post the name of the video in the comments so we can search for it and find it. Do not paste the link, because links in my channel are disabled to prevent scammers to scam you. Second alpha, we got the open interest now at 24 billion. This is a full breakdown of open interest. See it as tons of people throwing the towel, not having belief that the price can re-enter this area. Look at the different shape of the open interest in August in 2024, when people were thinking this was the end. Actually, the open interest reclaimed support with lower prices, and we started shooting to the top with 100% profit. In this case, you can see that the price is kind of wanting to form in here a double bottom, assuming that we hold around this area and create a pattern like this. But the open interest is not really agreeing. People are closing positions, both shorts and long, and this is starting to get very close to the 21 billion open interest that we have at these highs. I will say if the open interest goes all the way to here, I will consider it as a leading indicator of what could be that the price is going to do next. That is the way we've been using for now almost 2 years the aggregated open interest as a leading indicator. March is back into the red, and remember what we said, with February in the red, another alpha independent from the rest says that with a February in the red you get a March in the red too. This was COVID and the previous time was 2014, and we don't have past performance in this chart up to 2013. The average of March is again in the positive, just like February was, but here we are in the red. So it will be interesting to wonder what happens after these 2 red months in past performance. That could be another alpha that we can put in our briefcase. We have 2 red months and then followed by 34-26% in April in 2020, and these 2 red months finish with April also in the red. Finally, May recovered with almost 40%. But we are in 2025. In theory, we should be equivalent to 2021. Definitely, that is not being the case at the moment. Or we should be like 2017. Some people compare it with that, but in terms of monthly returns, it doesn't match either. Hash ribbons. The hash rate has come back above the trend line. So now we are starting to increase the chances to get that buy signal that people have already forgotten with all the noise and all the fears, volatility, and manipulation going on since Sunday. Let's look at the 4 hour. I'm gonna drop the time frame to the 1 hour. Allow me to do that because I just wanted to see if this rolling over that we are having in here has any chances of pinching this and having a rally from there. There is a likelihood that we do that, guys. Remember, the equation to achieve that is 1, a rally into the news on Friday. But there is one ingredient to that formula that you cannot miss. General markets need to open in the green and revert the losses from yesterday. Put a big green candle that puts a smile into all these people that are currently biting their nails. There has to be a shift in sentiment, because if this today puts a new low, particularly on Nvidia below $114, I guarantee you that that crypto summit is pretty much not gonna do anything. General markets are the boss at the moment. Tariffs, okay? Let's focus on that. You probably are wondering yourself, then why the heck are you doing TA? Because we need to be 2-step up front. We need to know what's coming, what could come. General markets, and we have a crypto summit on Friday. Those two things together, plus doing the zoom in that we're going to do on the 1 hour, could give us a hint of whether that can happen or not. So that is the way the 4 hour is going to look if we get the tariffs delayed and we still have the crypto summit and everything looks perfect for a snapshot with everybody smiling. The counter case could be that the 1 hour just rallies into here, into resistance on the 4 hour, and then we see another rejection and we put a new low and we go to the area that I love for finding a reversal, just like we did in here. Then we repeat the same formula for another swing high. People are asking me, why are you not taking shorts? Well, I told you in here that this was breaking down when we were at 92.5. We confirmed that and I send it to you. I am never gonna tell you take a short. The day I do that, people are gonna complain in my channel in the comments, because it's really a fact that managing a short is a lot more difficult. You can enter in here, price can go to 97, people are gonna add more, then price can go to an all-time high, and people add even more, and then they get the whole account liquidated. And then whose fault is that? Well, someone say that this was breaking down, take a short. If I take a short, I manage it different, and that's why I try to keep the shorts to myself, just because it's too much hassle to deal later with those individuals. Okay, before I switch into the 1 hour, let's appreciate what is the current structure of the price. This is a trading channel and this is the main focus. We retrace all the way back into the neckline. When I was shooting the video last night, thanks for all the likes, 600 likes and 5,000 views. Lovely from you guys. And we were below the neckline at the time I was recording. That wasn't a great signal, because one thing is to come back to the neckline for a retest and then continuation. Another thing is to be at candle close, midnight, right below the neckline. So you retrace everything and a little bit more, and that is not acceptable. We had this fair value gap and we didn't even make any effort to go there to take it at 88. This was just dumping area. We came back down to the next level of support at 84k. Now we have it as a resistance. So we are in a very delicate situation here. This is still a falling knife, free fall, but we are creating tons of fair value gaps and I presume liquidity in this area. I haven't checked CME yet. I'll do that in a second. So let's go to the 1 hour and let's observe it while remembering that we are still in a very delicate situation. So I'm going to leave those lines, because those lines that are looking very noisy in here belong to the 4 hour time frame. And temporarily, I'm going to place this line in there. I'm going to change color so you don't get confused. This one that is in orange is the trend line of resistance of the 1 hour. And what we see in here is a bottom information on the RSI right there. Down, neck, down, neck. We are right there at the neck of that double bottom formation on the 1 hour. And we are right next to the resistance of the downwards sloping trend line at an RSI of 39. On the price action, we can see as well that if we place some sort of neckline in here at 84.2, you can see that there is some bottom information that is right now trying to break above it. We have then the second half of the W pattern at around 83.156. Of course, if we break below that, then we are done. You can tell that here we did this low, the next low, and the RSI goes up. That is a bullish divergence on the 1 hour. So we got everything there to pay attention for a breakout and close on the 1 hour beyond 84.267. That could give us enough momentum to take this fair value gap that ends at 85.8. Okay, now let's remove everything I put on the 1 hour. Let's go back to the 4 hour. If we get to 85.6, we are more or less just taking the fair value gap in there and hitting the next level of resistance. You can tell if I put a line in there at 85.6, that is the resistance. That's the resistance of the 4 hour, and it's also this RSI around here. So that 1 hour could just rally into the 4 hour resistance, but it could become, if the general markets have that moment of happiness, the happy ending for today, it could become the first step, the most risky one, towards the right direction. So it could be a good trade on low volume, small size position, very low leverage, to start getting exposure and build a position. If you're really bullish and you think that the general markets are due for a reversal, you can take that risk. If not, of course, we go back to the 4 hour. If you're busy working, if you don't have time to look for a 1 hour trade, then bring it back up to the 4 hour, to the safety and the slopiness of 4 hour. Much more boring, much more manageable. And the 4 hour is still in a free fall. It's rolling over, but it hasn't broken out from anywhere. Indeed, it's just still losing levels. Let's go to the daily time frame, and after the Trump pump, we went into 52 global resistance, came back down. So far, with this move down, we still don't put a low relative to the previous low of the price. So that is a bullish divergence, but that is as long and when we create a pivot in the price action on the daily. Just to be very clear, we already have a pivot in here, right? We went up. That is our pivot. Now, if we come back down in here and we created something like this with 2 or 3 days going in this direction, we can already say this is a pivot, this is a double bottom formation, and it's got a target to go all the way back up. But for that, general markets to come, tariffs fade away, crypto summit, 1 hour time frame, breakout, hit 4 hour resistance, start targeting 4 hour global resistance, then the daily needs to get to 94, and then you get this whole projection to the top to do full damage to the shorts. But that is getting ahead of ourselves a lot, okay? That is what could happen if we get that full equation. The MACD is still pointing down, mouth open, momentum to the downside, of course, came back after the reversal. We just have some humble potential bullish divergences coming on the daily, on the 1 hour and 4 hour as well. I suspect we also have them. But here is where things start looking ugly. Again, we are below the bull market support band, just like we were in this area in here. And this could become the dance of the what the hell is going on, like we had in all this period where we were reclaiming, losing, reclaiming, losing, reclaiming, losing. That's this bull market support really doesn't deserve that name anymore. Someone needs to talk with Benjamin and ask him for new settings for this weekly indicator so we get an actual bull market support band for the next cycle. And we are below it. We have it as resistance. So that is not a great place to be. But as I said, there can be that dance. So not because we reclaim, we are out of the woods anymore. And not because we are below it, we cannot reclaim it. You see this and you see my point of what we can think about this. The RSI weekly now is below support. So with this retracement overnight, we lost the 49 and we are now at 47. In the price, you can see where is the weekly support. That is at 85.9. But again, if general markets come up the rescue, we can easily reclaim there. I've never seen a long wick like this that spans all the way from 96.6 into 78.5 that gets bought up, and then you get another weekly candle down with another long 20,000 wick to the downside. I mean, you can search in here, and in summer you have 1, but then after many weeks you get 2 and then 3 and then 4. So you can have multiple of them, but I've never seen 2 consecutive weeks that get bought up. On the yearly, we are back into our red year. On the CPR, now we have turned the pivots into resistance, starting from 86.2, more accurately, let's say 86.4 into 90.5. On the CME, we took all the CME gap. As every time I talk about CME, there's always people saying, why are you so obsessed with that? It doesn't help in any way. Or the people that say, this channel became so political, I'm done watching your content. This is not politics, as I say last night. Every single Trump pump, and I have nothing against him. This is not the channel to talk about politics, although I reserve the full right to say whatever I want, just like you do reserve the right to watch any content you want. We are in a free world, are we? I'm not sure about that, but every single time that there is one of these pumps, we retrace it all and we put a new low. So far, we took it all back and we haven't really put a new low. I think that is on the table at the moment. I mentioned yesterday that getting into 82, 81 increases a lot the chances that we actually fulfill the leftover of the CME gap that ends. Let's look at the prices on Binance at 77.2, okay? You can see it in here on Binance, is right there, 77.9, something like that. The monthly now looks with another week to the upside against this area, but we are early in March. And also something to note is the volume is coming down as we move down. So it is early in the month, so don't take this as the final reading of the volume. We are at 4th of March, so this candle of volume should grow a lot as we come to the end of March. And particularly if it goes way lower and it takes a lot of liquidations throughout the month, we could be seeing this volume taking out the average volume, which is now right here. If we break down and we peak above the average volume, that is a confirmed breakdown on the monthly, and that is a serious signal. Every time we come back down in here, the volume is always below the average. Coming back down, closing the month below average, that's the wrong direction. We're going up, and when we go up, we get above average green volume. Take note of that. It applies to all time frames. And the signals for leverage squeeze were spot on in all this area. If you want to get access to those signals, look at the past performance, play with it, play with parameters, use alerts to your email or anything. You can get a VIP subscription from thetradingparrot.com, and you can also copy the chart from thetradingparrot.com/charts. The monthly support, and by the way, all of these charts are in that page/charts in my website. Many of them are just using basic indicators, like for example in here you can copy this chart and get access to these two indicators that are for free on TradingView. The upside is that you can see all my readings, all my lines. Every time that you copy the chart, you get the latest things I've done, and that is for free as long as I'm not using one of the membership indicators or third-party paid ones as well. Monthly is still above the support. That is great. We get a new signal now from the futures open interest oscillator. We are back down here at around minus 18% in the red. If this starts curving back up on CryptoQuant, I will let you know, because the last time we did that, it was also a signal that we were going to reverse. That happened prior to Trump tweeting. No news from big whales in terms of deposits or withdrawals. This is the same as yesterday. ETFs on spot had another outflow. It's a small one with 74, most of it coming from BlackRock. We are back in extreme fear, so you cannot escape today the 3 slaps, the 3 coffees in front of the mirror to remind yourself that we are looking for longs. All right, we are looking now at liquidity. In the short term, we have taken all of this at 85. There is a little bit of humble liquidity below 84, but then after this vacuum, we resume with 78.2. This is located from there because the recent time that we went low, that is precisely where we hit the longs, and we left quite a big chunk. Indeed, in the longer term liquidity, there used to be on this end a big heel with this shape, and we took half of that heel, we sliced it, and we left in here all this liquidity that still spans up until 75. Then there is another spike at 74, and then we have number 3 that ends at 65, starts from around 71. So that is what we have as a potential target, the half of 2 and potentially 3 if general markets continue in yesterday's trajectory. If there are further news of tariffs taking place, that's not going to help the price going up. If those events pull back because they delay it or some strong argument causes the tariffs to fade away, then this area in here could become a higher low, and then we can easily reproduce this to the upside. So with the two different narratives, you can either way use a Fibonacci trend extension from the top of the collapse in here to the bottom, and then you place it right there where we sold. A continuation of this, just of the same magnitude, a ratio of 1 takes you to 73.7. That is around 74. If you do the Fibonacci extension, you can get to the golden pocket at 60.5. So that gives you a range to play with. Of course, you have to overlap it with what's going on in here and not just trade it blindly. That is downside based on Fibonacci extensions. And if we wanted to look for upside, we do it from the earlier bottom in there into the highs, and we place it where we are. Remember that this can drag a bit lower and you have to accommodate it, but if we place it at 82.4, you get a rally into 99.3. That's the same magnitude of the one we just had. Or if we do 1618, we get into 110, a new all-time high potentially. That just gives you a perspective of what's on the table, really. It doesn't necessarily tell you at all what's the direction, but in my opinion, it's a must to understand placements of risk and profit taking. To the upside, in the short-term liquidity, we have 97.1, and 97 was around the area mostly traded in all this range. And I even suspect that the point of control is still somewhere there. So even going to 97 on the 4-hour time frame in here, let's actually point to the right area, something like this, is just going to the point of control, and that's still resistance to get into the bullish side of the 4-hour time frame. Liquidations of the past 30 days, immediately below the price we have 82.6, above the price 86.6, 89.4, and then that 95.5 that has a cloud in here with the middle at 96.5. After that you can get to 100k, but that is quite far from now. We need to move 16k to get there. And let's do some surgery to the order book. You can see in here that the shorts are taking high leverage trades. The average is above 10x at the moment. That's why we're seeing this green, and that is a bullish signal because they tend to get 99% of the time squashed to the upside. So that is a point towards that 1 hour move. Remember that the 1 hour time frame was pointing to 85, and if they are with an average over 10x, you can hit them very quickly and still remain in a downtrend. Keep that in mind. Also, we are back into the extreme fear. That's another bullish signal. Bullish signal good enough to start looking for longs. Funding rates are back in the positive, so we cannot use that as something bullish. And the bidding is starting to increase into 0.08. You can see that in the past performance, we needed a bit more than that to start producing reversals, like 0.21. 0.21 didn't make the trick. Then 0.22 did a bit of a trick, and eventually 0.29 was what we needed. That is not always guaranteed, is not always the same number, or the timing is not always perfect, but seeing loads of limit orders below the price wanting to bid is always something promising. Liquidity on the 1 month, they're at 78, and we are very close to that. Yes, we have at 100k too, but we need to move 16k up to hit that. So we're gonna need the crypto summit and the general markets really to help with that. Whereas to continue coming down, we just need to keep talking about the tariffs pretty much. Shorts are now at larger risk with 400k. That is not that big, is not shallow either. So it is a point towards some upside. And a move into 86 could flatten this once again. And then we run out of petrol to continue going higher. On the 1 month on fire charts, let's have a look. Where is the support? We have 37 million at 76k. We have 26 million at 80k. Below in this area immediately around the price, we only have 14 million, 16, 11 is very shallow, but also the resistance is, and we start having 22 million at 88k, and then 28 million at 92, and we start getting serious at 100k with 40 million, and then at 110 we have 55. So I could say that there's been loads of positions close. We used to have just a few days ago over 70 million, over 100 million. Now we are talking about single digit. So my opinion is that market at the moment is trying to figure out direction. We are in the same boat, to be fully honest. And I'm gonna share still probably the most important 2 last alphas that you want to be aware. Net longs, shorts, delta. Let's look at this. This has been the area of value for longs. Areas that are very high are good value for shorts. And we have flipped all this range into a new range low. a lot more bearishness, but the top of this new range seems to be this blue line, as you can see, and we are right at the top at 7,000. So if we repeat the previous performance from 24th of January and we continue with the same performance, then this is a point not too long, okay? If general markets flip things, we might transition to move the longs versus shorts back in this range. You see, that is the range where we were trading with longs and shorts, oscillating during bullish moves. Now we are oscillating in the red most of the time. As soon as we get green, sell off, and so far the longs are here, so this wouldn't be for me a buy unless we cross above together with no more tariffs. Otherwise, this is the perfect time to sell, the perfect time to sit on your hands and look again for new areas of value at this part of the chart. Let's look at the order book in here as well. There is some resistance at 84.9. They want to short that level with 600. Below the price, there is just 600 again that they want to buy at 76.5. Nothing above that. Then some other levels, 600 at 76, 600 at 75, and then the most serious ones, 900 at 72.5, and two levels over 1000 at 70 and 69. Do they want to short beyond that? Not for now. There was a level that pulled out, you can see it in here, that wanted to short 89.100 and now it's gone. Fair value gaps, we have a whole array of value gaps to the top. You can take note of them. The fattest one is this one that ends at 89.100, that ends where they wanted to short there. 85, that will get taken if the 1 hour breaks out. Below the price, we have immediately this one that ends at 81, which is the perfect recipe to complete the CME gap if we take that one. I'm probably gonna do a separate video about general markets because it's looking ugly and I wanna see the opening prices, and I promise you that I was gonna show a new alpha, and this one is very interesting. So this is the full bull market on the RSI weekly. We started from lows of 28, but there is a caveat. I invite you to pause the video and get a chart with RSI on the weekly on Binance Bitcoin. And you're not gonna see the same I'm seeing. That is because I'm pulling out from my sleeve an old trick. This trick is to change the source from close, that's the closing price of the candles, into lows. Why am I doing this? Why so sophisticated and complicated? No, it really is not. It's just because I want to see the RSI applying to each individual wick to the downside, right? We want to consider for the value of the calculation of RSI 48.8 in here. I want to take 78.3. I don't want to take in consideration the 94.1 because that is the closing price. I care about the lows, and that is going to give me a nice trend line of each and every single low on the RSI. Stick with me. Don't get itchy. If this is too complicated, pause the video, get a coffee, 2 slaps, come back in a minute and continue watching. You do not want to miss this. 6th of March, low of that candle there that went to 19K, put the first low. If you don't believe me, that low connected with the next low connects all the lows of each impulsive move. Great funding this morning, fresh from the oven. 11th of September 2023, next touch. Megaphone pattern 2024 hits 42 and it starts another rally. Where are we now? Well, this week that went into 78K put a low on RSI of 46.47. Right now, this is giving us a reading of 40. So if this was to continue being the support trend line of the lows, not of the closing prices, we haven't done yet a low that touches that. Do not read this as a forecast. This is something interesting. It's a data point. We might not go there. If tariffs are canceled, then we're gonna just watch this video as something interesting, but it didn't play out. If it plays out, awesome. We can go then to RSI 40, and RSI 40 is now 74.841. That is very close to also pinching the highs of the megaphone pattern, just like we have done every time we go to a new range. We come with a wick and we shake hands with the previous high. Tariffs could do that trick. What happens if we go beyond 40? I don't know. I don't know. It depends. If we pinch 40 a little bit lower and we come back above it and we do a bottom information, we could have have another wave up, a dead cat bounce or something. Reclaiming it could be bullish, touching it, testing it is nice. Now, I also wanted to look into what's going on with the longs from 16th of December. You can see on the weekly how longs on Bitcoin come down and come down and come down. We are in this trajectory and we need to find a bottom in here. So far, longs continue to throw the towel. At the very low end in here, this could be calling for a bottom, but we are too far and I'm not even sure if I want to get there because that will be a lower low relative to the lows of October 2023. Notice as well as an alpha that in the whole bull market, longs have never been beyond 66%. This area in here, beyond 65% of longs, has been the top each and every time. It's almost like Bitcoin doesn't admit more longs than 65% for some reason. That's another indicator in the VIP subscription together with the RSI VIP. Guys, if you want to trade Bitcoin altcoins on excellent exchanges, at the moment I'm using OKX and Binance. I have links down in the description, particularly if you decide to go for OKX, that link gives you 60,000 in rewards depending on trading volume. By using any of my links, you also reduce the trading fees to a minimum. If you want to go for an option non-KYC, I've got two exchanges, I keep thinking about Bybit, no more Bybit, BitUnix and Bluffin. Thanks to not being KYC exchanges means that you don't have to do that, no need for VPN, and you can open as many accounts as you want with different emails. If you do so, make sure that you use the links down in the description to claim these rewards. BitUnix is great because no matter how small is your deposit or your trading volume, you always get bonuses. Bluffin is amazing because the top rewards are huge, like a Model 3 Tesla, an Apple Watch, and everything in between. Thanks so much for watching. Let me know down in the comments if you want me to review any particular altcoin and what do you want me to answer. Sometimes people say do TA of Solana, but what do you want to know? Do you want to know if it's going to do an all-time high? How long it's going to take? What is the bottom? What is the next level of resistance? It would be awesome if you can also guide me to what you want to hear from me. Thanks so much for watching. I'll see you in the next one. Take care. Bye-bye.